This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, traders? Welcome back to Benzinga Live. Good to be back on Benzinga Live, and we do have a busy show today. Busy week overall. Of course, if you tuned into pre-market prep or any of our other coverage, you will know that this week is the biggest week of the year so far, at least when it comes to earnings. Let me go ahead and pull up our Benzinga earnings calendar here. And I mean, right now, we had SMCI last night, so far the biggest one. But tonight, as you'll see, here we pull it up. So last night we had SMCI. This morning you had UPS, of course, announced some layoffs. Pfizer actually delivered some good earnings, but the stock trading lower. GM also beat. But then today after the close is where the big boys will start coming in. We will hear from Microsoft. We will hear from Alphabet, the parent company of Google, AMD, Starbucks, EA, Mondelez, you name it. They're reporting today after the close. And, you know, going into this report for Microsoft, you know, especially Microsoft, Google too, AMD, you know, with Microsoft, a lot of high expectations. So we talked about it with our guest, David Prince, today on pre-market prep. And essentially, you know, for AMD, with the expectations that it has going into this earnings report, you've had AI drive the market higher for basically the entire second half of 2020. AMD is going to need to report strong earnings and raise guidance by a significant margin. I mean, David Prince said upwards of 40% guidance raise for this to have a positive reaction in the market. If you're willing to get in to AMD right now, you could be rewarded if they do that. But that's the only way that this stock is going to move significantly higher after the earnings report. Because right now, I mean, you've already had this move, and I'll pull up my Benzinga Pro and we can start looking at the charts. But you've already had this move of up more than like 200% in the last year. A lot of this growth that the company is expected to report tonight is baked in. And I just wonder how much of that is going to be true across the board for big tech. You know, someone pointed out today on pre-market prep, I said that about Netflix going into the report, and I was wrong on it. Sure, yeah, I was. But Netflix, which its stock has, you know, come back and also has been ripping, hasn't had the same amount of growth priced in as like an AMD or NVIDIA over the last few months. So let's just go to a weekly chart here on AMD. You can see here, beginning of 2000 or from June to October of 2023, this thing moved lower from about $120 a share to $100 a share. Okay, you had about a 20% pullback, a 20% healthy pullback. And then you can see what happens after this. And of course, there's fundamental reasons for this move higher. You had NVIDIA report very strong earnings. You've had AI demand just continue to rise, chips across the board. But this thing has just taken off like a rocket ship, is up to $180 a share from $100 a share. And again, going into this report, you need to be aware that people, you know, might be ready to take some profits. Here. Going over to Microsoft now, pretty much the same exact situation. Now, Microsoft's stock, you know, is not trading at as crazy of a valuation as AMD. You have a market cap of now more than $3 trillion. Microsoft and Apple are kind of both vying for that most valuable company in the world spot. Price to sales 14, that's high. PE 39, that's pretty high. Forward PE 37. So let's go back to AMD. Actually, AMD's might just be slightly higher. Yeah, forward PE of 46. And then you compare that with like an NVIDIA, which is forward PE of 30. So why do we talk about this? Why even mention the PE at all? So the price to earnings ratio will show you people will say it shows you how expensive or how cheap the stock is, which to an extent is true. But the way I like to see it is it's showing you how much growth is priced in. And companies that are trading at a higher PE valuation, so again, you're seeing Nvidia's at around 30. Let's go back to Microsoft's. Microsoft's is at 37. So there's actually investors are actually essentially betting that there will be more growth in Microsoft moving forward than Nvidia. That's what that valuation is telling you, is that it's trading at a more expensive multiple because there's more growth expected. If AMD, say, reports this crazy growth and raises guidance, you'll see that price to earnings come down because their earnings are increasing. But you'll also see the price go up, so the earnings would have to increase more than the price. But right now with Microsoft, it's, do you want to be buying Microsoft at a 37 PE? Or would you rather be buying Apple at a 28 PE? Okay, so that's about the same. Compare that to the other Magnificent Seven stocks. You have Google, similar, 23 PE, actually pretty cheap, Google. Moving forward, again, the market might just be saying there's going to be less growth here in Google than Microsoft or Nvidia or AMD. But Google stock, I mean, this thing is making new all-time highs. It's been a monster since this huge downturn. I think Google, and I know they got a lot of shit when they came out with Bard and their AI thing, and it looked kind of behind. OpenAI and Microsoft. But at the end of the day, do you think Google, which doesn't just run Google, of course, also runs YouTube and has other brand names under it, do you think Google's not going to be a big player in AI? It's a $2 trillion tech company. It's got money to spend on R&D. It's shown that it is in. I mean, they've had the deep brain AI investments for a while. Again, am I worried as a Google shareholder that they are behind the ball on Microsoft and Nvidia and these other AI stocks? Yeah, Google is. I mean, they're not the leader in the class right now, but do I think they will be? Not maybe the leader, but a leader in AI. Yes, of course. All right. I see the people in the chat asking for it. We'll pull up GameStop's chart real quick here. We're looking at a weekly chart here. We'll get into some quicker time frames. Stock currently trading at around 1470. Before we get into some levels and price predictions for GameStop, I will ask that you guys retweet this stream, get this out there. That'll get more people watching, get more people seeing that we're talking about GameStop and maybe into some other names as well. So while I wait for you guys to do that, I'll hop around and come back to GameStop in a second. Let me go to another stock I've been watching today, Rail Vision. Rail Vision now is up more than 1,000% in the last month. This is an Israeli company that is making technology to try to prevent crashes and accidents on railways for trains. And this isn't really just like, oh my God, people on message boards and Reddit and stuff running this up. You do have some actual positive news catalysts in the past couple weeks, including the company signed a $5 million deal with a leading U.S. railway company. It doesn't sound that significant, but when you consider the fact that this is it was a $45 million company going into today's trading, and then they sign a $5 million deal. Okay, that's a ninth of the company's market cap in one deal. That's pretty significant. B, the company got approval from the European Union for some of its technologies on trains in Europe. So it does look like this company, stock aside, is on the right track, pun intended, to becoming, I guess, a more widely adopted technology that's used on trains, maybe getting some more customers. Now, let's be real for a second. Let's be a realist. The stock is up more than 1,000% in the last month. What we've seen from other runs like this tells us that sometimes, you'll see this continue before it fizzles out, but eventually you will see that fizzle coming. And I'm not going to call a top here in Rail Vision. We could wake up tomorrow and this thing's at $40. It's at $20 right now. But would I go be chasing this stock after it's already up 1,000% in the last month? Well, maybe, and I might buy some shares today, but I'm not going to do it with any money that I wouldn't be, okay losing, because this is a more speculative play, right? You're not like coming in and buying Apple on a dip because you love the valuation. You're buying something because it has momentum, because you're hoping that momentum continues. You're hoping more traders and buyers come in. Again, would I be chasing this up here? Maybe, but I would only do it with money that I'd be okay with losing. Like if I bought $250 worth of stock today and that turned into $50 overnight, I'd say, okay, cool. I wasted $200. I risked $250 to try to get on board this rocket ship, and I was late. And I'd be okay with that. Now, would I put, thousands of dollars that I need for my rent, for credit cards on here? No, of course not. I mean, that's just, so I think whether you're talking about Rail Vision, whether you're talking about any stock that has momentum, especially cheaper small caps like this. I mean, let's be honest. There's probably a reason this thing was only a $45 million company going into trading today. Are there things that are great that this company's doing in terms of getting an EU approval and signing deals? Sure. But that doesn't necessarily justify 1,000%, move in the last month. All right, let's go back to GameStop again. If you guys want to talk some more GameStop, retweet this or share it wherever you are watching, and we'll definitely do some more GameStop talk. Look, we know the story here in GameStop. We know the company's traffic in terms of customers or whatever has been down. More people are buying games online. But does that mean there's no value in this stock? No. There is value, and we've proved that. Keith Gill proved that there is deep value in this stock. Now that the company, though, is trading at higher than it was when all of this originally happened with GameStop, let's go through some of the financials. So price to sales is less than 1. That tells you the company is still cheap. That tells you that this is trading below. I mean, anything below 1 is crazy cheap for a stock. So price to sales below 1. I mean, right there, that's showing me that, hey, look, this thing is getting undervalued again, which you would think that, the market and the people, the institutions in the market would have learned their lesson about, underestimating this. So let's go through, and we're looking at Benzinga Pro right now, pro.benzinga.com, for a free 2-week trial. Let's go to our annual income statements. Okay, so on the far left is our furthest away. On the far right is our most recent. So this isn't great to me. As you can see, the 12 months ending in 2020, in January 2020 was about $2 billion. And now you're seeing that profit dip to about $1.3 billion. But here's the thing. Is that when you have a company like this, where you can just see in this that if you start from here, 2020, and work your way across to see how much profit this company was bringing in over a 12-month period, you can see that it's decreasing. That is not what you want. But what will happen is that people, and what we've seen happen is that people will come in and start shorting the stock because that is decreasing. But then you get to a point like this, where it did 1.3 bill. Okay, then it did 1.36, then it did 1.38, then it did 1.374. So now it's not really decreasing and it's holding steady, and the company's still doing X amount of revenue and profit in a year while still getting actively shorted. And that's where your opportunity is going to come in. Are we going to see a short squeeze in GameStop like we saw a couple years ago? Probably not. Is it in the realm of possibility? Sure. But you will see any heavily shorted stock that's still bringing in revenue get to a point where it becomes at least interesting for an opportunity. Because again, if GameStop can continue to pull in that type of revenue and it's trading at a $4.5 billion market cap, then there might be some actual, investors before we saw the crazy rise in GameStop, let's not act like it was all just, meme stock traders and retail investors that were buying it because of what people were saying on Reddit. You had actual investors coming in and buying the stock because of its value. You had Michael Burry coming in and buying it at $4 and $5. I mean, the guy behind the Big Short that had done all this research on the stock, on the valuation. Michael Burry is famously out in the market looking for value opportunities. Recognize that, hey, like everyone is just writing this thing off as dead. People are shorting this into the ground, but it's still actually a viable business. So, I don't know how the post-COVID story for GameStop is going in terms of, did COVID really change the buying patterns of people and how many video games they're buying online versus in person. But look, to be just completely honest, like I don't own this stock. I'm not buying it here, but if I had to choose between one or the other, I'd rather buy a few shares than short it, because I've seen how that goes when people short it. All right, guys, it is 11:48. That means it is time to bring our esteemed guest on for today. We are going to be bringing on Darrell Martin, the CEO and founder of Apex Trading. So without further ado, let's give Darrell our very special Zinger Nation welcome and learn a little bit more about Apex when we come back. What is up, Darrell Martin? Thanks for joining us on Benzinga Live today. Hope you're having a great Tuesday so far.
Hey, I'm having a great Tuesday. It's going excellent. How you doing?
We're doing great. Yeah, glad to hear it. So, are you saying you're having a great Tuesday because you're actively trading and your portfolio is green, or what's going on?
All the above.
All the above. Love to hear it.
Yeah.
Well, before we get into what you're currently trading and maybe some outlooks right now, Darrell, why don't you tell me a little bit more about Apex Trading, what it is, and why you founded it?
Apex Trader Funding is a company built with the valuations for traders, where you can come in and you take an evaluation where you make so much without losing so much, and then we fund you. We've actually paid out $95 million to traders in the last 2 years. And so we're booming. We've been open for 2 years, so just like rocking and rolling. We're going to pass 100 million this coming month. And I founded it because I found that there was a lot of prop firms in the space that just had a lot of rules to make you fail. Their main focus was not payouts. I wanted to make one where the main focus was payouts. And also, it was just a need that I saw in the market, where people didn't have the money, or didn't want to take the risk, or didn't want to risk the savings account, mortgage, whatever, but still wanted to trade. And we pay out 90% of the profits in that process.
Wow, yeah. So, I mean, how do traders get started with Apex?
They just hop on the website, apextraderfunding.com, and then they're able to pick a plan from 25,000 up to 300,000, and then from there they can they can actually do up to 20 accounts, and so they can get up to $6 million in funding. And as soon as they pass, it takes 7 days to pass the evaluation. Like a $50,000 account, you got to make $3,000. So you make $3,000 on that account, you pass it, and within the same day, by the end of that night, you get your paperwork. You pay like a $150 fee, and then within a few minutes, you're activated and you're ready to go.
Got it. Well, yeah. I mean, I know we have a lot of traders in the chat that have been asking me about prop trading and stuff like that. So if you're looking for a way to, increase the size of your trades and potentially make some more money in the market, this seems like a good opportunity through that link in the chat, Apex Trader Funding. So Darrell, let's get to now current markets. Obviously this week, big week in terms of tech earnings. You've got Microsoft, AMD reporting this week. I mean, what have you been trading? What is your general trading strategy?
I'll go in and I try to avoid earnings because I trade futures. So I use them as a heads up because it can explode, especially like Microsoft, Google comes out, Netflix comes out, any of the big ones there. So you got to be really careful, or you got to trade really small, like micros. If you're trading those, I trade those because I focus on futures. If I was going to trade them, then I'd be looking at some sort of hedging option strategy. But then again, you got to be aware of implied volatility crushes, right after earnings come out. So there's all the dangers in that too with options. But what I do like about earnings season is it creates a lot of volatility. And that volatility allows for plenty of movement during the day to be able to place, amazing trades. Get in, get out, call it your day, and live for the next day.
Got it. Well, I mean, right now, Darrell, we're sitting kind of right at all-time highs in the S&P, NASDAQ, tech all doing well. And usually when the market's making new all-time highs, you have this huge influx of bulls. You see sentiment get very bullish. And we're not really seeing that right now. We're seeing, in fact, like a lot of people almost get more bearish as the market continues to move higher. Why do you think that is, and where do you kind of stand on just your overall view of the market right now?
I think that's pretty normal, especially when you because we just recently broke these new all-time highs. So you're going to have the automatic reaction of, okay, now it's time to reverse.
Right.
So many traders are counter trend traders, right? And that works until it doesn't, of course, right? So the market can be wrong a lot longer than you can be right. And so I think right now, everything, depending upon how the earnings continue to come out, but I think it's going to keep rising. So, in my heart, I'm a bear, like all the way, but I can't let that control my trading. And so right now, I just see things continue to move on up.
So why is that? Why do you say in your heart you're a bear?
Because I love going short.
You love going short. Yeah, I've found that, and I like to play the market both sides too. But I've found that some of my like favorite trades, or I guess the ones that are, I don't want to say the most fun, because obviously anytime you're making money, that's pretty fun, and I like that. But when you short a stock or the overall market and it goes down, you kind of get that like it feels good knowing that you bet against you went like against the grain, bet against
Exactly.
you were right, instead of kind of just following along and doing what everyone else is doing and buying and being right, which is nice too. Because like I said, either way, when you're making money, can't go wrong with that.
No, and then the market falls faster than it rises, so.
Yeah, and I mean, plus too, if you're doing it options wise and you have puts and the market starts going down, then you're going to get that double return of the VIX going higher. Yeah, exactly. You're going to see the volatility going higher, so you're going to see your contracts go up more than if they were going higher. So I completely agree with you there. But yeah, I mean, right now I would not want to be, I guess, like shorting this market. Right, the trend is your friend. People are. There's still a lot of bulls out there, still a lot of institutional money coming in on the long side, but eventually we are going to see that pullback, right, Darrell? You think?
We're definitely going to see the pullback, and the time to start looking at it is when everybody has decided it's not going short anymore, and then they all think it's going up forever, and then that's the time to start looking to go short.
Yeah, that's a good point. Because I'm thinking about how usually when the market's doing really well, you see, sentiment get better and more bulls coming in. But to your point, we just broke new all-time highs versus, if you look at the market in 2021, when we had broken all-time highs and then stayed in a bull market for months and months and months, then you got that euphoria of everyone being bullish. And that's kind of when you actually wanted to be bearish once 70% of people out there were bullish. We're not seeing that huge disparity in sentiment right now.
Exactly. And you'll start seeing that on all the magazines and all the news channels. The market's going up forever.
Yeah. Your mom will start calling you asking how to buy stocks, and then that's how you know.
Exactly.
All right. Well, Darrell, any individual names that you've been trading or want to touch on? I know you said you're mostly sticking with futures.
Yeah, I'm a NASDAQ guy. That's my go-to future. So I love the speed of it. And so, yeah, pull it on up there. Let's check it out.
Yeah, I mean, I've got the Qs, so we'll go with the Qs as kind of our proxy for NASDAQ. I mean, looking on a daily chart here, you can see at all-time highs, starting to kind of, maybe lose some steam here. I don't know. I mean, it makes sense, I guess, that the market would kind of stall out here on the technicals while we wait for this earnings week, because these next 3 days are going to be really make or break for the NASDAQ. If we get all strong earnings, this thing could take off. You'll see new all-time highs, but even the slightest kind of misses coming from the big companies, and I could see this thing pulling back hard.
Yeah, and a lot of what I'll see, like if you go over there on the right again and you zoom in a little bit, is what I call a sweep. Like you'll see the market pop up like it did right there, and then it'll pull down. It'll obviously fill in that gap. It'll sweep any of the open orders that have been left there from previous traders that didn't get filled. And then that's when they'll start making that pullback higher. So I'm not surprised at all by this pullback right now at the moment. But I think the earnings are going to tell the true picture. But even with good earnings, sometimes you'll see the market pop down a little bit, and then it'll take off and go because it'll sort of grab everybody, get everybody in short. The big boys grabbing them all, and then where your stop loss is going to be if you're short, well, that's where it's going to start pumping up hard. So
interesting. Yeah, it's good to kind of have some of that inside baseball there on the different levels of where you'll see those sweeps. All right, well, Darrell, we're coming up on the clock here, but I appreciate you coming on, giving us some more information about Apex trading. Again, through that link in the chat, if you want to check it out, if you want to get on board. And Darrell, thanks again for hopping on. Hope you have a great rest of your Tuesday, and happy trading. Good luck.
All right, thank you too. And by the way, check out the coupon link at the bottom of the page for discounts. So
okay, there you go.
That.
I'll make sure to throw that link in there one more time. So if you guys want to check it out, and again, like Darrell mentioned, there is a coupon there at the bottom of the page. So Darrell, again, thank you again. We'll chat soon. Okay.
All right, thanks for having me on, Aaron.
Of course. All right, guys. 2 more minutes left of the show. Then we are going to get into Powerball with my man Hot Stocks Luke. We're going to be bringing you a wild winner, disaster of the day, a hot pick, and a workout tip. So you know where to be. I mean, it's going to be your best spot to be on YouTube. I can guarantee you that. I saw Jay Rice and some other people talking about Microsoft in the chat. Yeah, and Jay, that's basically exactly what I've been saying, right? Is that I don't think it's enough to really beat earnings here. I mean, it reminds me, and I'm not saying this is going to happen, but this did happen a few years ago with the big tech companies. I want to say it was the last quarter of 2021, right before we got the big. All right, I guess I got to go way back for this. Right before we got this big downturn in, or was it here? No, I think it was here. I think it was this January report, 2022. But either way, the big tech companies all reported record earnings. Like Apple reported the most revenue it had ever had in a quarter. Amazon reported the most revenue it had ever had in a quarter. And basically all the tech stocks traded down on those reports because that was the expectation. And they were actually expecting the companies to, raise guidance or say good things about, what's coming next. And instead, the companies reported record quarters, but kind of said the opposite almost. And it was, again, this is going into 2022. And then you saw this big drawdown in the tech market. So just because Microsoft might report great numbers tonight, I'm not convinced that means the reaction in the stock is going to be great from the market. I think for Microsoft to trade higher tomorrow, you're going to need to see very strong numbers. And I'm talking like, EPS sales beat by like 5 to 10% at least. And then a guidance raise. And then, good news on the earnings call. Otherwise, if Microsoft just reports like a slight beat and doesn't raise guidance or anything, then I'm not convinced that this stock is going to be trading higher tomorrow because you've already seen, surpass the $3 trillion market cap, seen it go up more than in the last year. Microsoft is up almost 70%, basically, moving with the overall tech market. But either way, you can tune in to the earnings here. We've got the link in the chat for Microsoft's earnings after the close today. You also have AMD and Google. So you've got a lot of big names reporting tonight. Make sure to stay here and tune in. All right, we're going to transition to our Benzinga Powerball. Again, your one-stop shop on YouTube for a hot pick, a disaster of the day, a wild winner, and a workout tip. You're not going to be able to go anywhere else on YouTube, on the internet, for those things in one quick video. So make sure to stay tuned here. This stream will redirect you to the Powerball. And when we come back, get ready. We've got some great picks for you today.